What is up, Lucid Daily? Welcome back to another episode. And in this video, we have only a couple of things to talk about, so it's not going to be a super long video. So let's go ahead and get started. Very first off, we're going to talk about Lucid stock price action, exactly what's happening. We'll talk about a news update regarding Lucid, and then we'll talk about the bottom line now that I've had a couple of days and a little bit of an opportunity to talk to people that are a lot smarter than me about Lucid's S3 filing. We'll go ahead and jump to all of those things in this video, keep it short and simple. And the reason that I was gone yesterday, I didn't make a video, is because I decided to run a half marathon last night for whatever reason, and I could not walk afterwards very well. So I'm back, and I'm not running any half marathons today. So let's go ahead and dive into what's going on. Very first up, we have Lucid's price action, and Lucid was actually up 1.25% during the day, but for some reason in the after hours they are down 1.5%. There was some news that came out about NVIDIA and chip manufacturing. I have not done any research on that, so I am going to stay limited in what I say to that. But I wonder if that has any effect on what's happening in the after hours. Obviously, over the last 5 days, it's been quite difficult. Lucid down 8%, and over the last month, down 17%, 6 months, 38%, in the last year, 62%. So Lucid's been hit pretty heavily, and over the past year, they're down 13% since IPO. It's a little later since IPO. So they actually are still up. They're up 52% from when they IPO'd. So still relative. Like if you were an early investor before IPO, then good for you. But it ran up pretty quickly. So that is what was going on with the share price. And now we're going to go ahead and look at the piece of news that we have today. So let's go ahead and jump over here. So there was a new update that was released, and very simply, there's no specifics in this update, but in this update, it says that with this update, we're delivering enhancements that improve the robustness of a component that supports your Lucid Air's Advanced Driver Assistance System. So that's what ADAS stands for, Advanced Driver Assistance System. Before beginning this update, make sure your vehicle is not plugged in. So it's surprising to me that it's not plugged in. It's kind of weird that they don't specify which part it is, like if it's a camera, if it's a sensor. Like it's a super vague update. So hopefully we can get a little bit more specificity. I don't even know if that's a word going forward. So that's just one piece of the news. Now I want to talk to you guys pretty frankly and pretty briefly about what this S3 filing means. This S3 filing is fairly complicated, and there's still one more piece of it that I want to dive into. And there's some rumors or news circulating on Twitter that it allowed the ability for shareholders to dump a lot of shares. I'm not sure. So regarding the shareholders, I'm going to continue to research into that. But what the S3 filing is anytime you add shares, anytime you're raising money, most of the time it causes some sort of dilution to existing shareholders. Now, that is why companies go to the stock market. Companies go to the stock market to be able to raise capital. The companies raise capital to be able to use that money to be able to invest into their products and create products that will hopefully generate enough revenue. And hopefully those products have enough revenue that there's a little bit of a profit margin that you can add onto the bottom line, and therefore gets redistributed back to the founders, to the employees, to the shareholders. And that's where EPS comes in. Now, that's why companies go to the stock market, is to get funding, and that's why we as investors invest into companies, is to hopefully get some of that earnings per share. We want companies to have good earnings. Now, in this case, you have Lucid. They came to the market. We're investors. Investors were treated with a nice little rally. But overall, Lucid's like, hey, we have to raise cash again, and they're going to raise $8 billion over the next 3 years. Now, this should not come as a surprise. They've said that they had runway until about 2023, and I think that it was exactly a year before they could start raising in this I forgot what, a shelf kind of investment. So because of that, they're going to be raising more money in the hopes. This is something that's a little difficult. The hopes as an investor is that Lucid will be wise with that money and raise enough money to build a product or to build an assembly line of products that will be able to generate enough revenue that amongst those products they'll have profit margins that they'll be able to either reinvest or distribute in the form of EPS to shareholders. And eventually, one day, maybe they can buy back all of those shares that they issued. So that's the hope of when companies go public. When companies don't go to the market to make investors rich. I mean, of course, like they paint that picture, but companies go to the market to raise more money, and that way they can reinvest back into the business. So keep that in mind. Keep in mind when companies raise money, why they are actually in the stock market. And Lucid obviously is a negative EPS company right now. What we want to see is to start to see that negative EPS slowly be trimmed away into our positive earnings per share and a profitable company, because that's when real earnings start coming in, and that's where real profitability will take place, and that's where you'll see real results inside the company with the stock market. So the bottom line is raising money in the short term, it sucks for investors. However, if you're not worried about any of the short term, I know it's super stereotypical. I know it's super cliche, like, oh, like if you're invested in Lucid in the long run, you'll be fine. However, what this means is over the next 3 years, almost anytime the stock rallies, they're going to add more shares and they're going to raise money and they are going to reinvest it back into the company. As a shareholder, you want that to happen, but it's kind of, it hurts a little bit in the short term to see um, the stock continue to be pummeled, but they have to raise capital. Like they need it. They need that $8 billion over 3 years. So keep that in mind. The S3 wording was extremely complex, and the amount of shares, like the different styles of shares. Either way, whenever they add more shares, it's going to dilute shareholders and to raise money. That's the point of the stock market. So don't get too frustrated. In the short term, it will be frustrating. That's just the nature of it. But the hope is that they can take that capital and they're wise with it, that they're able to build a more efficient process. They're able to generate more revenue, have better margins, thus redistributing. And a lot of companies, they may take that money and they may burn more cash to reinvest. They may build another factory there. They may have to do another cash raise. Who knows? But slowly but surely, once companies prove that they're being smart with their money, that's when more and more investors don't really have too much of an issue saying like, yeah, like I'll invest into this company that's losing profit because I know what they're doing with that money. Now, what will be really tricky is, I guess my number one question that I would ask, if I could go to Peter Rawlinson right now and like have a no BS meeting with him, that's just like, you have to tell me the truth. And like, it won't ever be like a gotcha kind of question, but I want to know, what do you plan on doing with that money? And like, what specifically? Like, don't tell me like you just want to like make things more efficient. How? What are the real issues? Because I did not get very specific issues. There was one word, they said it like 37 times. It wasn't transit. There was a specific word that they used in their earnings call over and over and over again, and it was a super broad word, and it didn't provide any clarity to actually what was going on. And then a few weeks after the earnings call, you have Peter Rawlinson displaying this car that's supposed to beat the Plaid, to which we still don't have specific details on. We just have like less than 2 seconds, like more than 500 miles, things like that. So it is a little frustrating to see the development of, like, I think we're at 7 cars now, and we haven't even perfected the launch of 1 or 2 cars yet. So that's what I would probably ask Peter Rawlinson. And I hope as investors that we are smart enough that we ask good questions on earnings calls and not not silly questions that may not necessarily pertain to additional shareholders or people or other companies or other capitalists or other ventures or other funds that are interested in investing into Lucid, when the most upvoted question is their partnership with Apple. He's not going to answer that on an earnings call, but what he may answer on earnings calls, what do you plan on doing with the money that you raise? And then saying like what specifically. So if it's like, we need to raise more money because we need to get the Air Pure off the line like yesterday, like we're way behind, like we have not stopped working, like that's what I want to hear. I don't want to hear, oh, and we're excited to announce a new car coming out next year. It's like, no, like we have enough cars, like let's get volume. We have so many prototypes, but we don't have volume of anything yet. And that's what's probably the most frustrating as an investor. So that's bottom line, what I think is the truth behind this cash raise. In the short term, will it be frustrating? Yes. But if you trust Lucid's management to handle the money and to redistribute it efficiently amongst the company, then that's a good thing. So I hope you guys enjoy this money. I hope you guys enjoyed this video. And if you enjoy my perspective on Lucid, consider subscribing. And like always, see you next time. Thanks for watching.